Well, all right, you guys. Merry Christmas. It's Christmas morning, and I'm trying to go through the list of companies we talked about over the last few weeks, and you probably have more. But this coming week is the last chance, probably the last chance, over these next 3 days, well, 3.5 days, to buy stocks potentially at their lows for the upcoming year. And that's the whole idea, that there's tax loss selling. And my opinion that most of these stocks have an ongoing short selling issue, which the regulators and the so-called SROs don't care about. Your brokerage firms don't care about. But I'm trying to pick. So that, I guess that's by way of saying this whole pool is speculative, and nothing I say here is financial advice. It's just going through some ideas. But my number one I gave yesterday as the logic shell. That I would say, obviously it's in the speculative area, but I would say I would rate it a buy, and I think it has almost certainty. In the context of speculation, it has almost certainty of giving a good return over the next, let's say, 30 to 90 days, simply because the shell is going to be purchased. The second idea I have, I would say, is also in the speculative area. I would give it a buy as well, and I really like it. This is my favorite story stock outside of the squeeze plays, so-called squeeze plays we're looking at. However, I think there is risk in it, so I would say highly speculative buy would be my idea. The company is called right now is called Cunningham Resources, but it still trades under its previous name as Houston Natural Resources, HNRC. Just to say who they are, from their website, you can go and pick up, you can look at who we are. So let me see if I can show that to you. I guess I got to do it one page at a time. They are Cunningham Energy, and Cunningham is a oil and gas company with assets in West Virginia, Illinois, and the Williston Basins. All areas that I'm familiar with, but I'm really particularly familiar with the Appalachian Basin and the Illinois Basin, having raised money for those two areas in the past. It's also H&R Acquisition Corp, which basically acquired, that's a SPAC. That's a SPAC. And they basically acquired, I'll correct myself if I'm wrong, but they acquired Pogo Producing. And that's exciting to me because HNRC owns a piece of that. But I'm going to admit that because of our experience with the Aubrey SPAC, and other SPACs, it comes down to the financing behind it and who is involved. I mean, these SPACs in oil and gas have worked. And I should tell you one reason why. Several years ago, you remember the pandemic. Well, during that time, oil just collapsed and economies collapsed. And there was, in the old term they use in real estate, blood in the streets. Well, my hat looks goofy, but the sun is shining. This helps my eyes. But oddly, human psychology, when it comes to money, when things are cheap, oh, I don't want to buy it, I don't want to buy it. And it was hard to raise money. I think Frank Kristen, what he's done, he has a vision, which I share. That's why I like this one. That we're under investing in oil and gas. The rest of the world wants to have a North American lifestyle, while ours might go down. To me, Russia's going to have the American century. China's trying to, with limited oil reserves. The Middle East, parts of Africa, all of Southeast Asia have young, burgeoning populations. And the demand for oil is only going to grow. When you combine that with the fact worldwide and in the United States that we're not replacing what we produce, to be simplistic, the decline curves cut in, oil prices are headed a lot higher. But Frank also has a strategy with gold, with copper, with clean energy. It's really water treatment. It's really an interesting agglomeration of ideas. And my impression from reading, I've tried to read all the filings. They're limited on the SEC website. But one of the strengths about HNRC, you can go to their website, Houston Natural Resources. He puts everything up there. You can read everything. But one of the risks here, HNR acquisition, there was a capital company that reminds me of all the other capital companies that raised the initial money. I don't know, but it's possible on HNRA, that's this HNR Acquisition Corp, that it could experience the same thing that other SPACs have. What happens is, for lack of a kinder term, the criminals fund the SPACs through fronts, and then the company does all their work, and as soon as it gets to time to de-SPAC, they take their money out, and then the stock gets destroyed, and that's where they make their return, because they can get their money out essentially risk-free. Okay, that's a risk, but now that I said it, what's good about Pogo is it's a strong company with revenues. It does look like the money's staying there. And in any event, it's not HNRC in toto. It's just they own part of that. Then they own Rhino Energy Property Limited. And the key there, they have a truly world-class team. And then they have Cunningham Mining, which has a 9% interest in a placer gold project in the Golden Triangle of British Columbia. So that's exciting. They have worldwide diversified holdings, and that, I'll get to that in a second. They retain ownership 17%. Then they have CE Energy Sponsors, and they have Worldwide Energy. Okay, that's a broad, it's kind of like I said, an agglomeration of ideas, of opportunities. And what I like is the overall framework that we're going to be entering into a period, in my judgment, of scarcity in resources. We've had a Goldilocks period for 40 years, and it's not going to be your grandfather's Oldsmobile this next decade. And in this time, I think commodities, real assets are where to be, and H&R is doing it. Frank Kristen is doing it. Now, let me go quickly to worldwide. I have the Worldwide. Worldwide Diversified Holdings was distributed to shareholders sort of 9 months ago. And it had, I'm going to take a sip of this because my mouth is dry. This is 3 years old. Let me go to the, sorry. Here it is. I thought I was organized. The WHDI was, I'll just read it, on June 30, 2023, Houston Natural Resources Corp. announced today it has filed a registration statement for Worldwide Diversified Holdings to register the shares involved in the spinoff. The trading, blah, blah, time, approval, and all that. It'll start at $3.50 a share. They distributed one share, of World WDHI for every 2 shares that one owned on, I think it was May 26th of this past year, of HNRC. So 1 share of WHDI for 2 shares of HNRC. The company, it was effective May 26th. Non-energy investments of $53 million in exchange for this. And that is that. So that's in everybody's account, and it should be trading this year, that's this week, or very soon in the new year. And we'll see what happens with that. Okay, I'm going to go backwards on the news updates, but before I start, I want to give you my final risk warning on this idea, and I just don't know how to get around it. In this same update here, I'll read it to you. And this is June. They also announced it in January, February timeframe. The company had announced that it signed a $10 million underwriting commitment for acquisitions and a listing to a major exchange. The company anticipates uplisting to NASDAQ in the 3rd or 4th quarter of this year. Well, it hasn't happened yet, but I mean, it's not going to happen in the next 3 days. So I would expect that has obviously been delayed into the beginning of next year. So they want to uplist to the NASDAQ. And then he, as all CEOs, the benefits of an underwriter can provide to the company include acquisition and expansion capital, market awareness, analyst coverage, and increasing market interest into the business model. We all have learned that that's complete hogwash in Adriana Friedman's NASDAQ. NASDAQ is a fancy slaughterhouse for small companies. But so that's my risk I'm trying to explain to you. I can't find anywhere what that $10 million deal is. It's clear to me since January, right in here, the stock's just straight down. And so to me, one of the explanations for that is you might have a shady underwriter selling stock that doesn't exist. They sign the note, they get it done. The same pattern we've always experienced. On the other hand, there is another explanation. The whole market for these stocks is under pressure, but there is another explanation. On the end of 23, which was here, that was the original distribution date of the worldwide holdings. That got changed by NASDAQ or FINRA, I think it's FINRA, to May. Well, you had a spike each time, but once that asset was distributed, maybe legitimate shorts figured they just gave away a lot of their assets, we can sell it down. Anyway, I don't want to, I feel like I've emphasized that enough. My own view is Frank Kristen looks like, I've never met him, I've tried to contact him several times, but he looks like a pretty savvy financial guy. He's got a good idea, and he's a bit of a financial wizard because he's acquiring assets inexpensively. He's made the WDHI distribution. I think he's going to make 2 more dividend distributions within the next 6 months or so. Okay, I want to show you a short-term chart of HNRC. And I'm ever the amateur chartist, but I see a glimmer of hope here that this is trading up. Here's your 50-day and your 200-day moving averages. I've put a gray line in here where I think that's an initial range. If the stock can trade to this high and break through right here, we could have a whole different story. But let me give you those numbers. The stock basically is trading at 3 cents, 2.5 cents a share. It's unbelievable. I'll show you why it's unbelievable. The 50-day moving average is 4 cents. The 200-day moving average is essentially 9 cents. There is a band of buying which could become selling once the stock goes up, sort of between that 8 and 9.5 cent range. So that might be the trade. I mean, you could buy it here and that becomes the trade. On the other hand, if it gets above, and I'm talking about these are short-term targets, if it gets above 13 cents, we could get back to, well, let me look on this chart. I drew the line. You see that yellow line up there? If we broke through 13 cents, I think it goes to 25 cents. But if we broke through those 2 spikes at 50 cents and at 75 cents, $1.25 is I think achievable. But remember, the NASDAQ markets are subject to constant selling of non-located, against the law, non-existent, against the law shares. So enough on that. Okay, here's why I'm excited about this company. I'm going to go in reverse order. Newest first. On December 11th, Houston Natural Resources completed its business combination. That's the HNRA actually. So let me read it. Houston Natural Resources Corp. has announced that its portfolio company, H&R Acquisition, has completed a business combination on November 15, 2023. And listen to this, there's a good punchline. By purchasing all the equity interests in Pogo Resources, LLC, and its subsidiary, LH Operating. So this was a privately owned company. It used to be public, I remember it. Operated in the Grayburg-Jackson field. And here's the thing. They bought the property in 2019. This is analogous to real estate during a time of war. You can buy it while there's blood in the streets. That was cheap. That's where the value creation is coming from here. Sorry for raising my voice. All right, the the 2020 baseline production level was 500 barrels of oil equivalent per day. They've increased it since then, and it now averages just under 1,400 barrels of oil equivalent a day for the first 9 months of 2023. They sell all the oil under contract. They had income, and well, I'll tell you that positive cash flow and 20 million in revenues, 4 million in net income for the 9 months. Total assets 70 million. With the acquisition now completed, HNRA will report its first consolidated financials for the fiscal year ended December 31, 2023. Okay, here's the punchline I wanted you to hear. HNRC, that's your company if you buy into it, anticipates declaring a dividend of its HNRA position in 2024. And there it is. So I think that's tremendous. My guess is that would take a few months, 6 months, but it's got cash flow, which is the key metric in oil and gas, and asset values, and that'd be fun dividend to get. I don't know what it'd be worth. He doesn't say, but 70 million. I forgot to look up how many shares of HNRC are outstanding. Stock information. Stock quote. Let me see if I can tell you how many shares are out. Nope. Let me go to, sorry about this. Should be quick. I don't know why my throat is so dry. Now I'm warm. It was cold in here when I first got back. All right, the stock closed at 2.5 cents on Friday. The outstanding shares are over 200 million. Held at DTC are 90 million, and the float is 45 million. So let me, if we use 211 million and we have, this asset value is probably low, but if we use 70 million, it's 33 cent per share distribution. I think it'll be higher than that because that's, their production is increasing. But anyway, all right. So that they made that announcement on December 11th. Key takeaway, there's a dividend coming next year of the HNRA assets to shareholders of HNRC. Okay, on November 14th, HNRC reported its earnings for the first 9 months and for the quarter. Okay, the key highlights. And this is why I don't understand why the stock is trading so low. Total revenue reached 15 million, which was an increase for the 9 months. Total earnings were almost 9 million, and that was an increase up from just over 8 million. Earnings per share rose to 6 cents per share from 5 cents. That's earnings per share. Now, part of it might have been a one-off, but still, the stock's trading at 2 cents. Okay, and now here's the punchline of this press release. Notably, the company achieved a net asset value, that's net asset value per share, of 62 cents in Q3. 62 cents a share, and the stock's trading for 2.5 cents. I think it's one of the biggest potential arbitrage plays that you'll see. Okay, then they updated some of their milestones. I'll go through it quickly. Cunningham Energy. They achieved 100% ownership of Cunningham Energy. Sorry, I don't know why. This is interesting. Cunningham Energy has an appraised value of 352 million, and that's of a year ago. The appraised value translates into $2.54 a share. $2.54 a share. Now, the reason that doesn't show up in the NAV, in my judgment, is it requires drilling of wells to book this $2.54. They are planning on a 68 well drilling program, which I would imagine could take more than 1 year, because I don't know if they're ramped up to do that all in 1 year. I happen to have quite a bit of experience, for me, not for you, not for them, in that area, because I raised money flew out there, visited, brought investors, and I own a bit of a overriding lease position in several wells. Several, that sounds like a lot. 3 wells that are exactly where Cunningham is in West Virginia. Okay, so that's pretty valuable, $2.54 a share. I wonder how that stands the test of time if you use investors' money to drill with. That might come down a little bit, but still, that's pretty powerful, $2.54 a share. They made some corporate changes related to this. They're going to change the name and symbol and the QSIP number, all to rename the company Cunningham Natural Resources. Okay, the other thing they did, and this is another punchline, realized a value of 15 cents a share. Now, what that means is they sold non-core assets, basically their water remediation systems out of Texas, for 15 cents per share profit. And it says here, with the potential for a 10% per share future dividend. I don't know what that means. 10% of what? 10% of the current price wouldn't be that exciting. 10% of the asset value would be very exciting. That would be what, 6-7 cents a share. 10% of I don't know. Those are the only 2 ideas I can come up with what the 10% refers to. Now, Frank, I've listened several times to his presentations. On that 15 cents per share realized by asset sales, he implied that, and it's tricky because it might be how I wanted to hear it, but it sounded like the entire 15 cents is going to be distributed as a cash dividend. Then that was in the beginning of his presentation, which you can find at his website, and go to, here, I'll tell you I think it's called the Emerging Growth Conference, Houston Natural Resources. It'll come up. But then during his presentation, he said it again, that he was thinking of distributing the 15 cents in cash, or maybe it's some part of it. But then during the question and answer period, he admitted that it might be a stock dividend rather than a cash dividend, and that's still under consideration. So, but that's the second dividend. If it's 15 cents a share, which is the entire amount, that would have a huge impact on the underlying price of the stock. But even 6 cents or 7 cents a share would do that, particularly if it were cash. So that's one of the other catalysts for this trade. I do caution that he signed this investment banking deal, and I don't know the terms of it. All right, let me go on. In the mining area, they completed the acquisition of a 9% interest in the placer claims in the Golden Triangle in British Columbia. And this includes permits with initial reserves valued at over 500 million. So they have 9% of that. I'll let you do the arithmetic. That's not bad. They did spin off the worldwide diversified holdings, so it shows that that's his model. Create shareholder value and spin it off. And if you look it up, he's in there alongside of you. Whilst his investments may not be at these same prices always, sometimes they are, his ownership in each class and each place is significant enough that when he helps you make money, he's helping himself make money. In other words, our interests are aligned. All right, and then it says they're actively evaluating other things. I'm going to try to finish very quickly. In the second quarter, they also announced positive earnings. That was August 15th of this year. Total revenue for the first 2 months were high. I'm not going to, for the 6 months was 9 million up. For the 6 months, 6 million up. And earnings per share, 5 cents versus 4 cents. But here's the thing I wanted to tell you. The company at that time had a net asset value of 25 cents a share. They reworked the purchase sale agreement on Houston Acquisition Corp. And I'm not going to go through it all. This is the one positive, though, I saw, which contradicts all of my concerns. Absolutely contradicts all of my concerns. In this case, August 28th, HNRA signed a commitment letter with First International Bank and Trust. That's legit. So that doesn't have any of the risks. But remember, this is the SPAC. But we own a piece of that. All right, this is the part I wanted to read to you on this one. When the HNRA, when the SPAC business combination is completed, let's say, they don't give a deadline. But all right, when it's completed, HNRC, our company, will be able to provide a liquidity event for its shareholders. That is expected to be within 180 days of closing. So there's the asset sales that generated 15 cents. And down here, I already read that to you. And I don't know if I read this to you, but I'm going to just read it again. This is October 4th earnings. The company has appraised asset values of $2.90 a share. This is October 4th, 2023. The company has appraised asset values of $2.90 a share. I'll just read the bullet points quickly. They completed the asset spinoff of Worldwide Diversified Holdings, which you should already have, and it should start trading soon. They completed the 100% asset purchase of Cunningham, and that's where a lot of the value is. $352 million if one were to assume a 68 well drilling program, which I think they'll get interest in. They completed an acquisition of the 9% mining in British Columbia, and They also completed an acquisition of 40% interest in Rhino Energy. This is a junior energy company who has assets in Canada. They have a lot of reserves. The three Ps are equivalent to 15 million barrels of oil. And using $85 oil, that works out to a value of $1.3 billion. They have 40% of that. The company realized value at 15 cents a share, with a potential for 10% future dividend. I don't know what that 10% is calculated off of. It could be off of the $2.90 a share. It could be off of the 62 cents a share. I don't know. But they have 15 cents cash they can distribute unless they need some of that to uplist. But anyway, there's a cash dividend coming, and there's a dividend of HNRA coming once that deal's completed. HNRC expects that they will exceed annual projections for 2023 of over 20 million in revenue and 12 million in earnings. $1 million a month in earnings. Okay, so that's it. They are, if you go to their website, which is HNRC, I'll give you the exact handle on that. It's hnrcholdings.gcs-web.com. But anyway, if you just Google it, you can click to it. You'll notice that they are behind on their filings about a year and a half, 2 years. All of that's going to be completed in January. You'll have the 2022 and 2023 updated. So it is 37 minutes. My rationale for this idea is that you could basically buy it while nobody's looking, 2.5 cents, maybe 3 cents. The cash distribution part, which I have to say in his presentation, he said might be a stock dividend. That's been in the works for a while. I know he and his board are considering it, but I wouldn't be surprised if he made an announcement before the end of the year, this week. I don't know that, but based on listening to him and reading the material. So anyway, I think you could have up to 15 cents a share in a cash distribution. My guess is it'll be lower than that, but whatever it is, it'll be more than 2.5 cents, 3 cents. That's number one. Number two, his earnings are going to be coming out in January, and I expect that to be strong. Number three, he is working on uplisting to NASDAQ. I'm not as excited by NASDAQ as all CEOs are. I think NASDAQ is just a higher class abattoir than the OTC markets. But if you have a guy like Frank who is capable of raising money, putting deals together, and he doesn't have to go to the criminals for financing, it should be okay. Obviously, that might involve some risk with a reverse split, but he says he'd like to get on NASDAQ via acquisitions without doing a reverse split. So we'll find out. And then finally, the dividend distribution coming next year of HNRA, which to my quick calculation might be worth 30 cents or more a share. That's pretty significant too. And that's the basis for that recommendation. If you could buy it in the 2 or 3 cents range, and you look at it as a January trade, I would say 4 cents, 9 cents, And really it could get to 50 cents, 25, 50 cents. But you can look up a chart yourself. We're down here. And the key is we could have a little rally. On the short-term chart, I think it's showing strength, but there's only 2 data points that show that. But if it's ready to move from here, certainly 4 cents is next and probably 8 cents. So I'm going to leave it there. I'm going to wish you Merry Christmas. And I've got several other companies I want to update you on. But thank you for listening, and peace to everybody.